regulars, and uh, what we're really trying to I'm really trying to throw light on. I mean, I have my own views on what the market has done today. Most of my technical signals all turning to the sell side, but the real question we are trying to I'm trying to raise here is what is the downside risk, and should investors, at least the way I think more like a man, what do you say, actively managed fund rather than a passive one where I should simply sit tight. So if I do see an opportunity in one way or the other, where there can be a significant drawdown, I try to pull back and take advantage of that. So that is how I am positioned. But do you see the kind of risks in the coming months, and are positioning for them, or do you think it's better to simply sit it out based on holding on to longer term investments? What are your thoughts?
Great story where P ratios are 80, 90, 100, and we are very good. Now, coming to who let the bears out, did the bull market just end? I think this whole move, uh, which started 18 months ago, that time the fundamentals, and this time the fundamentals, there is not much of a difference. Only thing is, there is a lot of propaganda. ये अच्छा है वो अच्छा है कुछ अच्छा नहीं है. Things are bad. Few uh, companies are doing very well, that's for sure. But at the cost of the SME and other things. Now, 18 महीने पहले 12,000 था. क्या गया है कि वो 18,000 हो गया? क्या है? It is just our emotion, hope, और मेरा देश महान. Nothing else. Why will you buy equity at 80p? For what joy? आप समझते हो 80p मतलब क्या होता है? और टेक्नोलॉजी बोला टीसीएस 4,000, ना इन्फोसिस 1,900. अरे क्या है क्या? एक्सेंचर वापस 270 आ गया. 267 is the low, I suppose. So there is a lot of hogwash in India in the name of patriotism and whatnot. Please, if I am an investor, how do I care whether it's an Indian stock or a foreign stock? I'll buy whatever is cheap. I will only buy India if it goes down a lot. Otherwise, there is no value. Why will I buy this utility companies at such a ratio? Uh, P ratio. वो टाटा पावर 30 का भाव था, तुम 250 कर दिया या 240 कर दिया, तो 150 आएगा तो हम लेगा ना. ये भाव में वो थोड़ी लेगा. On the whole, our market is just checked up with thin volumes. There is no depth in the market. And as we see in technology, how it uh, went down, how it cratered. Similarly, all these banks, if you compare JPA, Morgan, or Goldman, or Bank of America, Citi, those metrics will be ultimately prevailing in India. You can't value banks like this as if it is a, I don't know what. So I would say it's just a minor correction of a down move that we went to 18,000. So again, we'll reach 12,000. Now, having said this, 12,000, 15,000, whatever, there are certain pockets where India Inc. is doing very well. If you find the spots, you will make tons and tons of money. And if you buy this nonsensical crap, it's useless. And lastly, mutual funds have around 38 lakh crore. and FII is a 41 lakh crore. वो 41 lakh में से 2 lakh भी बेच देगा ना. Now there is no space that the domestic can buy, and this buying was done at the behest of the uh, government, LIC, NPA, CPFO. वो अभी नहीं है पैसा उनके पास में. अभी तकलीफ आने वाला है और तकलीफ आएगा. थैंक यू.
Thanks, Sharadji. I'm just going to move to Deepak. Deepak CD. I mean, I have of course started out with my analysis and picture of the markets, which is also that rotationally we've seen different sectors peak out over the last 6 to 8 months, some of which broke out of multi-year trends. But as we have done that and we've overshot to the upside, whatever the valuations be, in a world where we are tightening liquidity, would we really see, if as interest rates go up and there's a linkage between rates and valuations, would that really bring down valuations if we continue to maintain the growth argument or that the macros of India is good argument? So, how are you looking at this entire thing? As a lot of discussion has happened over decoupling and so many other topics over the last 2 weeks as we've hit the 18,000 mark and tried to break it, and accordingly how you're positioning for it. Take it away.
Thanks, Rohit. Just one quick note. I don't know what's going to happen to the market. I'm more of a person who reacts than tries to look at where it's going. Roughly speaking, if you look at the macros, quite favorable to be honest. I've seen credit growth come back. We're seeing a lot of interesting statistics in terms of transactional movements. See, the GDP in general is basically recorded GDP. जो भी आपको दिखता है वही record होता है. A large part of GDP is not recorded. Your haircut at your barber and all of that stuff. Many of these things will not be recorded because it's just too small to be. And with UPI coming in and GST coming in and some of the benefits trying to kick in, the actual GDP recorded might actually look higher simply because more items are getting recorded. So the macros will start looking good, but this has a very different effect on credit because if you have more formal economy stuff, credit can increase. Credit increases, a lot of the formal economy pieces increase, which means the banks will or certain NBFCs may do well. There is much more potential growth in the future. Now I'm talking really long because macros don't work in the short term; they work in the long term. So the next 6 months may still be horrible for India. Remember that 2008 was not very bad for India from a macro perspective. We didn't do that badly. We were still fairly positive on real GDP. Yet our market fell 60% in that time. So although it recovered in a year after that, but the macros were not bad. It was just the market liquidity took away a lot of this. So I think focus now, if you're looking at the macros, things are okay, stable, things are good. In fact, looking forward, there are some issues. Some rural parts have declined quite substantially. There are some I mean, the issues are mostly about the rich getting richer and poor getting poorer, but they have more political ramifications right now than markets will actually cheer these kind of things. But if you look at short term, the liquidity pressure um, is is probably the one that is changing the game now. What we keep thinking and looking at mutual funds now, and I think we're looking at the wrong data, is we keep looking at equity fund में कितना पैसा आया. अभी equity fund में last month 6,000 crore आया, which is came to basically what they call growth funds, equity or largely equity kind of funds. So you say, oh, it's fallen from 16,000 crores to only 6,000 crores. It's very, but if you look at ETFs, index ETFs and other ETFs all put together, most significant amount of this money might actually be coming into equity index ETFs, which is 15,000 crores last month. So there is a significant amount of buying, and some of it very small amount of it is retail, but a good portion of it is also institutional which buys like an EPFO buys into ETFs and all that. So that effectively is domestic buying. Now, I don't know how long that will last, but if that remains, 15,000 crores a month is 1,80,000 crores a year. That's a fairly large chunk. So even if we lose another chunk from FIIs, there will be, I think there will be some part of it absorbed by this layer of index ETF buying, which is where FIIs play in the first place. So liquidity is the key monitorable now to say where are we going to go. If liquidity falls off a cliff worldwide, all markets in the world will lose money. All markets, not just India, and not India will not be decoupled in any way. If liquidity goes down very slowly, India has a relatively better chance. Remember that our own central bank has reduced liquidity by 10% from the peak. American Fed's liquidity, whatever they are talking about quantitative tightening, has reduced their balance sheet by 1% from the peak. So we are way ahead in terms of, of course, ours was not entirely voluntary. We had to reduce it because reserves were being sold. But RBI has done a good job in cutting down that, because so that we don't get affected by inflation going forward, and keeping the rupee or currency relatively stable. Your your point about liquidity, I think, is if there's a big gash in liquidity, like it happened in Lehman. It was very sudden when the liquidity just vanished off the market. That can happen even now if a large player goes bust worldwide, financial player that goes bust. You can't predict when that happens, but that's the monitorable. So if your liquidity goes for a toss, Indian market will fall big time, and as much or even worse compared to the West. If it goes down slowly, as much as they're trying to taper it and all that, without any of these extreme events, I think we'll probably do better than the West. We might still correct. There's no doubt about it, because you can't continue to. We are what, plus 1.3% in 2022 compared to minus 18% for the US S&P 500. So we have already outperformed a fair amount. So थोड़ा सा तो बनता है. We might give up 5-10% here and there, and that's fair. If it falls 10%, I don't think it's a big deal. But I think the main knowledgeable is, I'm sorry, I'm not like कि नीचे ही जाएगा या ऊपर ही जाएगा. I don't know whether नीचे जाएगा या ऊपर जाएगा, but I think it's important to monitor liquidity, and I am still participating. So I'm like, until it shows signs of extreme weakness, there is no reason to kind of say कि खेल खत्म हो गया, don't stay invested. I think when the time comes, you have to move. The time has not come yet. That's my point.
Declared. So I will start from mutual funds. We know in the month of April, May, June, where those 3 months where we had negative closings, monthly negative closings on the Nifty chart, as well as when we saw the bottom of 15,200. FII selling was close to 95,000 crore rupees in those 3 months alone. And out of that, about mutual funds, domestic mutual funds did close to 45 to 50,000 crore rupees of buying. So I would say somewhere around 55-60% of the buying during that time. And there's a popular opinion, misconception is in the market where it is said that DIIs are giving easy exit to FIIs. Now, I don't hold brief for anybody, neither for FIIs nor for DIIs, but it's simple fact that DIIs, or specifically mutual funds, they have mandate to invest in the market, right? That's why investors put money via their SIPs or lump sum allocations, including there are STPs, systematic transfer plans, and other things. So the point that I'm trying to make here is, recently, now that we have a mutual fund fact sheet out for the month of August, the balance advantage category itself, one category of mutual funds alone has AUM of close to 1,50,000 crore rupees. And if you see the fact sheet data for a few of the largest funds, if I take example of one of the largest funds, ICICI Prudential Balance Advantage Fund, it has close to 40 to 43,000 crore rupees of AUM, and they are if my data is correct, they are sitting on 65% cash. By cash, I mean debt, where they have mandate to go as high as 80%, 80% if the valuations are attractive. Now, the point that I'm trying to make here is going by 50% cash allocation or debt allocation that balance advantage funds have. I feel that there is significant amount of money that is going to enter at every level. Now, when we say every level, now those funds also use their own internal algorithm or metrics, whereby at every 1% drop in P, at every 1% rise in dividend yield, those funds will make purchase. But I'm trying to say that there is close to 50,000 crore to 1 lakh crore money sitting only in mutual funds to enter the market, where the mandate of the mutual fund is to deploy. So how do you take this? In the sense, I would feel that the global sell-off, we will not be falling, we won't be last man standing. I think that point is made by you and Ritesh both, and it's well taken. But if there is a wall of money that is still here to enter, and I think Ritesh also mentioned that point about India, the kind of growth projection.
What happens is sometimes in markets is far more behavioral, which is when markets are rising, people become more fearless and they tend to deploy. At the same time, what also happens is that when markets fall, people also become more fearful. So at the same time, as they may be willing to deploy at higher levels, sometimes in a falling market, and the macro environment, you're reading everyday news, people may or may not necessarily deploy additional cash. For all they may increase cash levels. So predicting behavior of money which is sitting on the margin, because I think funds do have room to decide whether they should keep higher cash allocations or not. It is I'm not sure if I can simply look at, okay, there's so much cash sitting and therefore market will not fall or will rise. I'm not sure if that kind of an argument works.
From a fund point of view, which I can clearly tell you, I cannot talk about balance advantage category as such, but in a normal equity fund, okay, if the markets, let's say, continue to fall and all, we would not normally be keeping higher cash. The industry would actually be deploying the cash. Okay, they will not be increasing the cash. Yes, they will keep something for redemption, but they will actually be deploying the cash because everybody wants, to participate on the upside. And if the cash is there, then, you will be buying assets much cheaper. So that is the way of looking at the mutual fund industry cash. Now, there is one point which I missed, and I think Deepak asked that question. What will be the catalyst, okay, of a further drawdown? Now, historically, assets have been sold indiscriminately globally when interbank funding is not available. So let's say something happened in Europe, and European banks do not get funding from US banks, and these European banks have a lot of assets on their book which they funded from overnight cash, which they borrow from interbank. Some of you might find it a little bit complicated, but it is not. It is like we all banks run assets which are borrowed from money which is taken for one day, and then next day you roll over that money. Every time we have found that indiscriminately assets have been sold, they have been sold when one financial institution has been in trouble. Okay, it could have been in March, some European bank, 2008-9. You know what happened during Lehman crisis. So you can all observe this phenomena by looking at OIS LIBOR spread. Okay, the spread today tells me that there is no systemic risk as of now. All the banks are properly funded. Fed is taking care. This time, Fed is taking care that yes, the assets will unwind, but at an orderly pace. If there is going to be an orderly pace decline, that is a very big if. If there isn't going to be an orderly pace decline, then I do not believe, looking at India's fundamental, that it will be very painful.
India being included in the JP Morgan bonds index, it's only a decision today. The actual flow will happen maybe 6 to 8 months from now.
The Nifty level. There are pockets, there are stocks which are evergreen, which might go down 5% or 10% at the most. So invest in them. And okay, I am against this nonsensical stories about India. But one thing I know, 5 years, 10 years, 15 years, my stocks will be up by 5, 7, 8 times from here. That's for sure. My view is on the indices, where all the crap, large crap is included, like Infosys and HDFC Bank and Asian Paint, where I cannot invest, but I can definitely invest in a lot of stocks, and I will, or rather, I have created humongous wealth. And if I'm alive, yes, I will be creating much more than that. So I don't buy because I love India. I buy because I see a prospects of a company. Patriotism and all, if I want to really show, I will pay my taxes, do my civic duty. That's it. I won't buy shares to prove I am an Indian. No. So there is a lot of patriotism in the market, which is really very stupid. And and believe me, I strongly believe if you are in the right stocks, you will make a fortune from at 17,500 also, and Nifty goes down to 12,000. I'm sure there are not many, but at least 100 of shares where your wealth will double, triple, 4 times in 5 years. So I'm not bullish on the market. I'm bullish on stocks and very, very, very bearish on the markets. That's my take, Amol. And Amol, one suggestion: don't overanalyze uh, things. Keep it very simple. Buy what is good, sell what is bad. ज्यादा मगजमारी नहीं करने का, इसने ये किया ना उसने वो किया. Why waste time? इतना टाइम अगर आप ये क्या बोलते हैं इस स्टडी में लगाओगे, क्या लेना है, तो आपका पैसा बनेगा. एक पॉइंटर है, एक 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 क्यूएसआर है. कितना मंदी आएगा कोई हिसाब नहीं है, 12,000 हो जाएगा. ये जुबिलियंट फूड है, वो अभी तकरीबन 5 करोड़ का मार्केट कैप है. 1 लाख हो जाएगा 2-3 साल में. ये क्या बोलते हैं वेस्ट लाइफ है, 12-13 हजार करोड़ है, वो 30,000 हो जाएगा. ये देवयानी है. ऐसा आई लाइक सच स्टॉक्स, आई इन्वेस्ट इन देम. एंड अनदर पॉकेट ऑफ इन्वेस्टमेंट which you will not like is MNCs. Just by engineering MNCs, go to sleep. Your money will double, triple, or 4 times. But if you are talking of HDFC Bank and all that, it's a lot of crap, nonsense. Why should you buy a bank at such high valuation? For what? Instead, you buy MNCs because, and the major advantages, out of 100% equity, 75% is held by the promoter. So on an average, they are generally 10 paid up and a capital of 10 crores. So how much is a floating stock? You don't have to worry, I'm selling or Deepak bhai is selling. आप लेके बैठ जाओ, वो बढ़ता ही जाएगा, बढ़ता ही जाएगा. So my investment philosophy is very simple: MNC and some good stocks. Rest, all the market short. You see me in trading time. Anything वो बोला अंबुजा ले लो, मैं बोला लेता हूँ. अब 50,000 बेच दिया. जिधर कोई बोला ले, उधर बेचने का. और एफएनओ मार्केट बेचने के लिए ही है. अपने लोग आप पागल है कि एफएनओ में लॉन्ग जाते हैं. एफएनओ मार्केट नेवर शुड बी यूज्ड टू बाय. It's not at all tax efficient. If you want to buy in B group, where the our taxation is only 15%, and here if you're running more, तो 42%, तो फायदा क्या है तुमको एफएनओ में लेके?